Welcome back to Investing with Confidence. I am your host, Joshua David, and we are talking about the do's, the don'ts of the financial markets, some of the great opportunities that we're seeing moving forward here in the stock market, but also in these other markets as well. We have options markets, we have futures markets, the currency market, cryptocurrency, some great opportunities with all of these, but you have to have a timing strategy that's designed to follow the institutions. And that's some of the things that we're going to talk about here coming up on this segment here of Investing with Confidence. But if you did miss tickets to that investing class that we do locally right here, so if you're listening to the show, we have local classes near you. Text the word INVEST right now. That's INVEST to the number 484848 for 2 tickets. When you do that, you're going to receive those tickets, but also a financial quick start kit that will help you get started right away. So if you're in locations listening to this show right now, text INVEST to the number 484848 right now. So Al, in the last segment, we talked about what's happening in the markets with quantitative tightening. Things are changing in the market. So we have to be positioned for whichever direction this market goes. And just doing a quick update on the market here, we never got a chance to do that last time on the last segment. S&P 500 as of right now, depending on when you listen to the show, is down about 15%. So a lot of people think that is a bad thing. There's opportunities with a down market in no matter what you're trading. It's called shorting, and I want to cover that here shortly. The Dow Jones, that also is down roughly about, we'll say 12% on the year, or from the highs, really, because the end of the year was the high of the market last year. The NASDAQ, as you talked about earlier, that's been lagging a little bit. That's actually down roughly around 25%.
Right. That is a bear market for the NASDAQ.
It is, right. I mean, a bear market is what, 20%?
Down
correct?
20% or more.
So we're seeing things roll over right now. If you look at any stocks right now, some of these stocks are down 50, 60, 70, 80%. So are these opportunities to be buying right now? Who knows? But that's why you need a timing strategy as far as where to buy, also where to sell. Last week we talked about the U.S. dollar driving a lot of these stock market gains last week, and that's actually kind of going back up again. So that actually dictates what happens in the stock market is kind of an inverse correlation. So that's the one thing we're going to continue to monitor here is the U.S. dollar. But in the last segment, as I mentioned, you were talking about quantitative tightening and things changing in the market. So real quick here, I want you to just explain the concept or the strategy that's designed to make money in down markets, because we're seeing down markets and people just don't know that there are opportunities in a down market. So real top level, what does it mean to profit in down market?
Well, that's what it means to profit.
Okay, let me rephrase
potentially
that.
make money in a down market.
This is talk about you got to ask the right questions on the show.
Well,
what is the strategy used to profit in down markets?
Well, it technically it's called shorting.
Tough one here.
Shorting the market, and it's a way of potentially benefiting in a down market. And there are actually a number of different ways of doing it, and we talk about those in these classes, these 2-hour classes that you're talking about. This is a game changer. If you don't know how to play what we're going to call the short side of the market, you're missing out on potentially half of the opportunities that are out there to benefit your portfolio. If you go through, your working years, if you work 40 years and you are participating in the market for 40 years, you're missing out on maybe 20 years, potentially 20 years of what could be growth for you. So
and that's why we have a retirement crisis, Al.
Exactly.
People are being put in a one-directional strategy, which is up. And we know the market does not go up forever.
No.
Over time, you lose that. You lose time, and that dwindles these returns. That's why we're seeing a lot of people come to these investing classes that want to learn, hey, how do you profit from down markets?
Yeah, and especially people that are getting close to retirement or maybe in retirement that thought that this bull market was going to continue, and they didn't really have anything to worry about because the Fed was always going to step in and boost the market if they needed
might be
to.
Working a few extra years here now, and who wants to do that?
Yeah, and as I have said a couple times over the last few weeks, and I said earlier, the Fed has said they have to create some pain in the market in order to get the economy down, the inflation down to a point where it's workable for
And
them.
it's not going to happen right away either. It's going to
It
take a lot of time.
it will take time, and what that means for you is that the market either is going to, well, for sure, is going to be volatile for years to come, which means big ups and big downs. But over the course of a year or so, a lot of people are going to find their portfolios just flat.
Yeah.
It's going to be flat to maybe down or maybe up a little bit. But the kinds of returns you've been used to, you're not going to see that unless you know how to take advantage of these swings in the market. So it's critical now to learn and use proper strategies where market direction isn't critical. It really doesn't matter. If your trade logic is correct, you have the potential to benefit regardless. And you have to use a strategy that's repeatable. But for every investment or trade that you make, there's basically two outcomes. You're either wrong or you're right.
Yep.
So what if you're wrong? What do you do? How do you protect yourself? What if you're right? What do you do? How do you protect your profits? Those are the things that we not only talk about in these classes, but that's built into our investment strategy that we teach our students, which is our core strategy.
Yeah, I want you to explain that coming up here, but we have a lot of listeners right now that might be getting out of their car and they want to come into this investing class locally. So if you're listening to the show right now, we have classes, physical classes near you, and these are classes where we talk about what Al's talking about, how to benefit in down markets, how to benefit in up markets. It's different strategies for different market conditions. So text right now, get your phones ready, text the word invest to the number 484848 for 2 tickets for the investing class local. When you do that, you're going to receive a financial quick start kit when you attend. There's actually some free stock picks in that financial quick start kit. So Al, you were talking about a core strategy, and that's kind of how I had mentioned earlier in the beginning, is a timing strategy as far as where to get in your positions, but also where to get out. So talk about what that core strategy is and supply and demand in the financial markets.
Yeah, supply and demand really is kind of the basic part of our core strategy. And what that means is that instead of looking at the word supply and the word demand, look at buyers and sellers. Supply, that's more sellers. Demand, that is more buyers. And it's a basic law, economic law. When there is more demand, or in our case, buyers for something, price will go up. When there's more supply or sellers, price will go down. So it becomes critical to be able to identify where the imbalance between the two is going to take place.
Yeah.
Where is there going to be more? Where will there be more buyers? Where will there be more sellers? But they have to be buyers and sellers with enough clout, enough money to cause a turn in price or a change in price. And that's really the important thing. It's identifying where the price of something is going to turn and then how far it's going to go. That's your profit.
Yep.
The things that you need to have in a strategy to really be truly successful over time is something that increases the probability of you being right, which means that you don't always have to trade everything. You sometimes people chase things that have a low probability that is basically a waste of their time. So you want to increase the probability of a position being successful or correct for you. You also want to take advantage of the full profit potential. This is a problem a lot of people have. They do not, first of all, they don't know how to identify a profit target. And because of emotions, they typically will get out too soon or stay in too long and have that profit taken away from them. The bottom line is keeping your money. It's not how much you make, it's how much you keep.
Yep.
That's where risk management comes into it, where learning how to, that's the what if I'm wrong part of it.
Yep.
What if you are wrong? Well, you're going to be wrong, so understand that and learn how to not let your emotions get carried away and keep you in something too long. Get out if you have a small loss, because a small loss can never be a big loss.
Yep.
And we teach you how to do that.
Yeah, the cool thing about these investing classes that you do here locally is you actually have, there's actually visuals, and you can actually show what it actually looks like with supply and demand. So just to go a little deeper into this, and we cover all this in the investing class in a live setting to learn how the markets work, but to go a little bit deeper on that, the institutions, Al, are moving this market, right? So we want to trade like them. It's kind of like one of that old saying, if you can't beat them, join them, right? So with a strategy that's designed to follow them, and you're talking about putting odds in your favor and probabilities, and then put low risk, high reward, high probability entry points into the market. And that's what you need to do. So think of as supply and demand, as Al was talking about, as almost like an auctioneer. If you have a lot of buyers, I mean, in this case, in the market, you got, we'll say, a big bank or a big institution that are buying millions of shares of a stock, and there's just not enough sell orders there. So if there's more buy orders than those sell orders, price is going to rise. And on the flip side, same thing. If there's more sell orders than buy orders, price is going to go down, just like in an auction. If you're auctioning off a tractor, and you have 20 buyers for one tractor, they're going to continue to raise that price.
Right.
And it's very similar. How the markets actually function is actually pretty similar, pretty simple.
It is, right. If we find an area where there is demand, then we're going to look for buying opportunities. If we find an area where there's more supply, we're looking for selling
Yeah.
opportunities.
When people are coming to these investing classes, Al, and let's just say somebody is brand new to the market, what do you think the key component that people are going to get out of this investing class if they're new to the market? What do you think that might be?
Well, one thing, I think you might have mentioned this word, is simplicity. We try to keep this as simple as possible. Most people have been conditioned to believe that it's way too complicated for them. They need way too much money. They don't have the time to do it. Those are all fallacies that have been perpetrated by Wall Street, because they need to, or they have to have, you need them for them to survive. Once you learn how to do this on your own, once you learn that it is not as hard as you think, it's not complicated, then maybe you don't need those guys. And here's the interesting thing, Josh. People look at an institution when they make a purchase of something. Or Warren Buffett, for example, at one point wanted to take a position in IBM, 64 million shares, $10.7 billion. Why would he put $10.7 billion into one stock? It's because he knows what the true value is. The same thing is true if Goldman Sachs or JP Morgan or Merrill Lynch wants to take a big position. They've done all sorts of work to determine what the true value is. And here's the secret, Josh. We don't have to do the work. They're doing it for us. We just follow what they're doing, but we do it in a way where we can identify where they have unfilled orders yet to become filled orders. In other words, where are they going to make a position to buy or sell in the future, so you can be there already to let them provide a profit for you.
Yep, I'm glad you brought that up. That's actually, Online Trading Academy has that core strategy that is designed to follow the institutions. So as we had mentioned earlier, you can't beat the market. You can't beat the institutions because it takes millions and billions of dollars to do that. If you're listening right now and if you have billions of dollars, okay, you can come talk and we'll have a different conversation, right? But that's why us as retail investors, it's great for us because we can get into the market without being seen. With our, $1,000 accounts, $10,000 accounts, $1 million accounts, whatever that may be. That way we can get in the markets and almost be like a mouse and take pieces of cheese as the institutions are moving it for us. We're a needle in a haystack. So if you want to learn more about a core strategy that's designed to follow the institutions, to trade with them, alongside them, and kind of the goal is to jump on their coattails and trade like them, you need a strategy that's designed for that. We explain that and show you what that strategy is in these investing classes. And this is for everyday people, retail investors, the public, on using these strategies. These strategies are available to us. You just haven't learned it. You just haven't been taught how to do that yet. So I want to give away, let's do this. For the first 10 people that text right now, get your phones ready. I'm going to give away 2 tickets and also a quick start kit that has some free stock picks in there. So text the word invest to the number 484848. That's invest to the number 484848. So if you're listening to the show right now, we have classes locally right where you're at. Just all you got to do is text. You're going to get a text back, and we'll communicate via text. These classes are about 2 hours. The great thing is they're free, and they're in how to get them in the market confidently and safely. Text the word invest to the number 484848 for 2 tickets and some free stock picks. Coming up next, Al, I want to continue this discussion about multi-directions, how to follow the institutions, but to use that for income strategies. We have a lot of people that are looking for income strategies. As I kicked off the show, inflation is skyrocketing. How to combat this inflation. This is Josh and Al, Investing with Confidence. We will be right back.